All right, Bill. Today what we're talking about is a lot of people are afraid just to buy homes. Okay, they are. They don't know if it's the right time to pull the trigger or wait or so. I mean, you can see a headline saying, "Hey, rates have dropped. This is a good time to buy." Then the next one says, "Do not buy." So much mixed signals out there.
Yep.
It's crazy now with the government shutdown and the economy and uncertainty. And you know me, I'm extremely cautious when it comes to buying things. I don't care if it's a vehicle, boat, house, or whatever. You always call me a worry wart.
You are a worry wart with the test. It's like, holy shit, we've been talking about this for a year. Just decide.
So the seasonal adjustments, we got to talk about. Is it a good time or is it a bad time? All right. In the meantime, if you like this kind of content, consider subscribing. It really does help out the channel. So this is what's spooking a lot of people. Okay. Tell me what you think. Payment shock feels real. Even small rates change monthly payments fast. The sticker shock makes when people get their payments, they're like, oh my God, my payment's gonna be $3,000 a month. People are having sticker shock. Even though, let's say their ratios and their mortgage qualifies them because they make good money.
Right.
It's still a shock.
Yeah, of course.
Yeah,
but what do you say about it? Sticker shock? Yeah, home values have gone up. So I guess, is that why, I guess I'm not comprehending it to the point that, like, if I was borrowing $400,000, what did you think $400,000 was going to cost you a month? I guess is what I'm saying. Now, I know the interest rates is a little bit higher, but like for today, as an example, I was speaking to one of the lenders prior to come out here and meeting with you, and he actually closed a deal, locked a rate at, I think it's 6.1%, which is really good for right now. Even though the interest rates are up a little bit again, we're still bouncing between that 6.1, 6.5, right? At the time
what is it, 6.3 now?
Yeah, 6.3. So it bounces back and forth. So, which is not a horrible rate. It's not a great rate, but it's not horrible either. So, and it depends on how qualified you are, obviously. But if you drop it down to, like, let's say 5.5, that's a pretty big difference, and that's a couple $100 a month.
Well, that's the whole thing. Is a lot of people are like, should we wait for rates to drop?
Okay, well, let's talk about that. Should you wait?
It's confusing because you get the
Why
confusion
should you
headlines.
Why? Okay, no, the hell with the headlines. Why should you wait?
Well, you wait because you can't afford the payment.
Okay, so then that kind of takes you out of the game. So let's say you can't afford the payment. So then you have to decide and make your plan. What do you need to do so that you can afford the payment, right? And I don't mean work extra jobs, because here's why I don't, I get you might have to work an extra job or overtime if you have the ability to do that, to pay some things down, you know what I mean? Or to get a little bit more of a nest egg put away so that you could put a bigger down payment on, so that maybe you could drop off like your PMI off of a conventional loan. You know what I mean? So you're not paying that extra mortgage insurance, which again, it's another $100 and some odd a month, but $100 is $100. It all adds up.
And another reason why people are fearing right now is because, HOA fees, homeowners insurance, property taxes.
Right, but those things aren't going to change.
Right. I mean, those are, those are going, they go up every year. I never remember anything going down when it comes to that stuff.
No, and it's not going to. And I wouldn't bet the farm, to use an old term, I wouldn't bet the farm on the rates are going to go, the taxes are going to go down, that we're going to have a 20% reduction in home prices. So I'm just waiting on something bad to happen in the economy, because then that triggers other things too, if you think about it, right?
Yeah, what do you think of the economy now with the government shutdown as of when we're recording this video and uncertainty? Do you feel like, I know everybody has to live someplace, but forget about that part. Do you feel like, hey, you know what, we're on sketchy grounds when it comes to the economy?
I'm so used to the government shutting down now. It's kind of like I didn't expect it wasn't going to shut down. Like, it's just.
But it's going to affect the economy.
Well, of course it's going to affect the economy for so long, and then just like it's going to do the same thing that it does every year. This isn't like it's the first time that this has happened. It's not. I remember the first time it happened, it was like, oh my God, this is insane. Now it's kind of like pretty much figured that nobody was going to agree on anything, and this is what was going to happen.
What do you think of this? You know, when it comes to people like, oh, I'll just take the higher rate, but then I'll do the refi. You know, the refi FOMO.
Yeah, why wouldn't you do that?
But I mean, I think it's dumb saying, okay, I'm going to take this higher rate, but I'll refi later on and lower the rate. But what if rates don't go down?
But right now you have a lot more power to negotiate. So then when the rates go down and everybody comes back into the market because the rates came down that everybody's waiting for, right? Because that's what everybody says they're waiting for.
So you're saying the house is...
Now, what's going to happen? Supply is going to come back down again, and then demand is going to go back up. And then what's going to happen? You're going to lose your ability to negotiate. You're not going to get concessions. You're not going to get that $13,000 closing cost concession as an example that just happened on a deal. You know what I mean? There's those things. You're going to lose the ability to do that. So, and then how much did you save by getting a little bit lower interest rate versus buying it now when you have the ability to negotiate? And I'm not saying you just take the first deal that you find. I'm saying you have to look for you hunt down the deal. You have to work for it. But then you go, and then when the rates come down, you renegotiate because you have control over that.
Right. Like what my suggestion to people that are afraid to buy a home is take a number that you're comfortable with, okay? Like, say you're comfortable with $2,000 a month for housing expense and work your way backwards. So, like, figure out what the taxes would be, what the insurance would be, you know, and what you could afford for principal and interest on a mortgage. Work yourself backwards. Don't work the other way. Don't get the payment and then like say, oh, can I afford it and think about it? Pick a number yourself. Am I off by saying that? Like if you're saying, okay, I'm comfortable spending $3,000 a month for housing expense. You know, taxes, insurance, principal and interest, mortgage.
Housing expense.
Yeah. So say $3,000. Work yourself backwards and you can figure out what house you could afford.
Right. Yeah. Okay, so what you're saying in a different term would be, it doesn't matter what the house price is. It's what you can afford. So if you go into, when you talk to your lender, you go into the bank and you say, my max monthly expense is $2,500, period. How much house can I get for that? And I'm going to put down X dollars. Done. End of story. And then that's what you go and shop for. And I have clients doing that every day. That's what I advise my clients to do. It's not how much is the house, it's what monthly payment do you want to be at. That's why it's important when you have a consultation to go and speak to a lender. And I know sometimes it seems counterproductive. I'm not ready to buy yet, but like, why would you look at a $500,000 house when you can really only afford a $350,000 house?
Right.
And even if it's not what you can afford, but it's what you want to afford.
Right.
Like, because the client that you just did the inspection for, they can afford a heck of a lot more.
Yeah.
Right? I mean, with their jobs, but they chose. They were like, Bill, they had their hard line, they drew it in the sand, and we literally walked away from deals because we couldn't get there. And that's fine.
Here's something interesting. Another buyer, he's buying a house, he's paying cash. And I said, oh, that's nice. Why are you buying a house? And he says that this is what he was telling me. He says, the American dollar is going to lose value because of inflation.
Okay.
So I want to take my cash and put it into a hard asset. So he's literally getting rid of his cash and buying real estate because he says, you know, historically,
it's
real
the
estate
biggest hedge against inflation.
Biggest hedge against inflation.
Because properties always go up.
So I said, you'd rather have real property than cash in the bank. He says, yeah, because every day as inflation goes up, my money gets devalued. It buys less and less and less.
Right. He's not wrong.
So, I mean, that was an interesting thing.
Right.
You know?
I mean, there's only been a couple times in history where we've had these, 2 or 3, since we've been recording it, where we've had major losses, but then they come right back up.
Right.
Up and to the right. We're constantly, the property values are going up, 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 and up.
And I asked him, I said, why don't you buy stocks or something like that? He thinks it's just too, he says, real estate, I go there, I can physically touch it, feel it, you know.
But he's not wrong. I mean, look, most of the wealth in the country was built off real estate.
But the other thing, you know, the people are afraid, you know, because of jobs.
Of course.
It's just that's like one of the biggest things, you know.
But so with them being afraid to buy a house, and I understand it. And if now's not the right time, then you rent. but somebody owns that house.
Yeah.
And you're paying somebody's mortgage. So
And taxes and insurance. They're
everything.
not going to rent it for a
They're
loss.
not doing it. Yeah, they're not exactly. They're not renting it so that they can lose money every month. They're making money. So why wouldn't you purchase the house if you've got the cash to purchase, meaning the money to put down, et cetera, and you've got the money set aside
For like 6 months, for emergencies.
Exactly, because you're going to need maintenance and breaks and things like that. Because
Yeah.
remember, the landlord is doing that too. So they're putting money away for those things. So if you can afford, and I'm talking single family home, not like a town, like an apartment. I'm talking house for house. And because I've gotten that in the comments too, I'm not talking apartments. So then you're building equity, little by little, but you're building equity.
Yeah.
You're putting the money back in, and you're building the equity and the wealth. Just something to think about.
Also, builder confidence, the reports came out, builder confidence is down, but they're still building. But a lot of them, I'm telling you what's going to happen, in my opinion, they're going to build them and they're going to rent to own. A lot of people are going to do rent to own.
I was listening to a podcast on the way over here from one of the economists, not a fly-by-night guy. He's on the national. He's part of the national, one of the national economists. And not to speak on it, but he had a very valid point why builders were still building and why we're underhoused.
What did he say?
It has to do with birth rates, even though they're down. Like if you take away all the lies and all the fluff from the media clickbait and you get into the real stories, when he looks at the real numbers.
I did 2 videos on birth rates alone.
Yeah, we're gonna talk about this on another video because he went down on birth rate and when you break it down, this is why I'm gonna have notes on this, because when you break it down by generations, we're underhoused. And it made sense because of the people who are becoming of age to afford a house. You know what I mean? That we're underhoused.
But the average buyer now is in their mid-50s, right? That's the average buyer now. But first-time home buyers are in the 30s now, right? It used to be low 20s, now
Yeah, but low 20s is ridiculous.
I bought my first house at 19.
It's ridiculous. But you're talking the average American. Even back then, that wasn't average. It wasn't.
Right.
How many 20-year-olds that back in 1970 bought a house?
That's 70. I bought my first house at 87.
80 something, right? Back in 1960, when Jimmy bought his first house, what was the average age?
All right. What about this one? Okay. People are afraid to buy because they're trying to time the market.
Yeah.
But listen, is that something?
How are you trying to time the market? So what's your research said? Because there's 2 different schools of thought on that. Are you a first-time buyer, never bought a house before? Or are you trying to sell a house to buy a house?
Well, here's my take on it, okay? So basically, the housing market goes up, it goes down, it goes up, down. And you want to buy at the bottom, okay? So I think it's difficult because it could be, on the way up, and you're like, okay, it's too high, and you're hoping for something bad to happen for it to go back down.
Of course.
Okay? Like me, when I bought my house, I was kind of timing the market. The market crashed, 2008? I bought my house in 2010, 11, but I knew everything was going to start going up.
Right. So and you were in a different position because you didn't have one to sell to buy.
Right. I had a house,
but you didn't have one to sell to buy. That's why I started this with, are you first-time buyer buying a house that you don't need to get rid of one? Or are you looking to sell a house to buy a house? And I hear a lot of people, because there's a lot of mixed messages out there, and they get confused that, well, I have a house to sell, but I want to time the market. Well, if the market's low and you're selling your house, are you going to go live with somebody else? Let's say the market's high as an example, right? Market's high, you sell your house. Well, you want to go live somewhere with somebody else. Let's say you move back in with your parents as an example. And then you wait for the market to get low so that you can buy the house. You see what I'm saying? If you're selling a house to buy a house, then you're going to sell in a high market and buy in a high market, or you're going to sell in a low
Right.
market and
I
sell
didn't
in a
have
high
to
market.
sell to buy.
That's my point. There's a big difference, and a lot of people get confused because it doesn't make good headlines, and it doesn't make a good story. It's a very bland and vanilla story.
Well, here's my philosophy on it. It's okay to shorten it up. If you're trying to buy at the bottom, okay, and you bought the house, I think it's about how long you plan to stay in the house. I think if you're planning to stay in the house 6, 7, 8, 9 years, okay, I think no matter what, between you buying and then you're going to be ahead of the game.
It doesn't matter what you do then.
It doesn't matter.
It's irrelevant.
So if you bought at the bottom or the top, because
it doesn't matter.
the market is going to change, and historically house values go up, so you're ahead of the game.
Right.
But where you could get screwed is if you're trying to time the market and you think you're at the bottom, so you buy, but then you want to sell really fast.
So if you're an investor or a flipper, you're
Yeah,
not the average person.
Right.
That's the other thing. People think they're a flipper, and you're not. A lot of people go into, and I have these conversations, and a lot of agents that I know have these conversations where they speak to just normal people like you and I who are just want to sell a house and buy a house. And they're trying to do all that. They listen to all this advice, but that's advice for investors. That's advice for people who are flipping houses and planning to sell in 1 to 2 years, right? They do it in 2 years, realize their capital gains, and they move on to the next project. But if that's not your case, and you need a house, you need a house.
Right. So, I mean, I would look at it as, like I said, beginning. Find out what you're comfortable with, work yourself backwards, and then you can figure out what kind of house you could afford. And the second thing is, you have to put in your mind that, you know what, I'm going to be in this house 5+ years. If you don't do those two things, I think you could be in trouble.
Setting yourself up for failure.
You are setting
You're
yourself
really. Just being honest and direct. Being direct. It's you have to be pretty savvy, right? Agree with this? Let me know what you think too. You have to be pretty savvy to be able to purchase a house now so that you can flip it in 2 years and make a profit.
Oh, yeah. It's not happening.
You got to be pretty savvy. Now, if you're looking to purchase a house, to summarize everything, because you're ready to sell your house and buy a house, or you don't have to sell your house and you're going to buy another house, there's some deals to be had right now. Yeah, the interest rates are up a little bit, but you also don't have any competition, and you got a lot of choice.
Yeah, like my house, from when I bought it, it's up 400,000. So even if it drops 100,000, I'm still up 300,000.
And and again, it's fake money if you don't sell it.
It's fake money. Yeah,
it doesn't matter.
Like I get a kick when people say to me, "Oh, I'm selling my house and I'm taking $150,000, $200,000 loss." I'm like, "Wow, that sucks."
Yeah, because when you say that, I go, "Holy smokes! So you bought the house, let's say for 400,000, and you're going to sell it for 300? You're taking the $100,000 loss?
Yeah,
that's what that means."
Right, but they don't look at it like
that.
No,
it's Zillow said my house is worth 700, and now 2 years later it's only worth 600.
But I paid 200 for it.
But I paid 200 for it, so I just lost $100,000. That doesn't make sense.
Listen, I'm going to be like a broken record. See what payments you can afford. Work your way backwards.
It's the best way to do it.
And plan on being in the house at least 5+ years, because we're still in it, in my opinion, for a little bit of a rough ride. But if you need a place to live, you need a place to live. And if you're comfortable with the payment and you feel secure in your job, I don't see what the problem is, as long as you're comfortable. Everybody's a different situation.
Of course, everybody's a different situation.
Yeah.
So
anyways, that's today's video. Do me a favor, consider subscribing. It really does help out the channel. And watch this video right here. I picked it out just for you. And remember, if you need a real estate agent anywhere in Florida, United States, my phone number's below. Talk to you later.
See you on the next video. Thanks for watching.